Curious about the national residential real estate market? We'll look at the 6 key national real estate market metrics and whether they favor buyers or sellers. At the end, we'll provide specific considerations for those wanting to buy or sell a home. Hello Central Kentucky. This is the National Real Estate Market Watch for September 2023, brought to you by Century 21 Simpson Associates. Let's dive into the metrics and trends based on the latest national market data from July. Months supply of inventory. Months supply of inventory measures how long the current inventory of properties would last at the current rate of sales if no new properties came on the market. 6 months of inventory represents a balanced market, favoring neither buyer nor seller. This is the 4th consecutive month of increasing months supply of inventory. It is also the largest. In July, months supply of inventory increased by 0.2 months, which is about 6 days. The previous 3 months increased by 0.1 months, which is about 3 days. In total, there's 0.7 more months supply of inventory, or 21 days, available compared with the 2.6 in March. Buyers have a little less competition compared to the previous month. Since March, buyers have benefited from a few more options each month. Even still, competition is strong, especially for the most desirable homes. At 3.3 months supply of inventory, the market continues to favor sellers strongly. For context, over the past decade, the average month's supply of inventory was 3.9 months. Current inventory. Current inventory reflects the number of active listings as of the 15th of the month. The number of actives is not static and depends on when the report is run. A trend upward or downward from month to month can be established by using the same day of every month. In July, there were 1,110,000 homes on the market. The actual number of unsold homes on the market rose 3.7% this month, but is fewer than July 2022 and the lowest level since 1999. Inventory is one of the 2 major factors currently impacting the housing market. There are now half as many homes for sales as there were pre-COVID. Sellers can feel more confident and may be more likely to put their home on the market despite rising mortgage rates. Only buyers who are not impacted by rising mortgage rates are likely to appreciate having slightly more options to choose from. It's important to underscore how a lack of available homes for sale has kept home sales tempered. Seeing an increasing number of homes available for sale is a positive signal for buyers who are able, willing, and ready to buy. Existing home sales. The existing home sales volume is the total number of all the properties whose sales contracts were completed or closed during the month. At 4.07 million, home sales were down 2.2% compared to the previous month, a contrast to the normal seasonal trend of rising sales in the summer months following last month's decline. Homes that sold in July typically went under contract in June. Interest rates rose from an average of 6.35% in May to 6.71% in June. Anytime there's a notable bump in the interest rate, it causes buyers to pause. Given the rate jump, home sales will be closely watched by buyers, who will need a little time to adjust their mindset to the new rates. After rates jumped to 7.23%, the Mortgage Bankers Association said that applications for purchase mortgages dropped to their lowest level since 1995. The chief economist for Freddie Mac went on to say, "The conveyor belt of houses that come on and off the market is just grinding to a halt." September home sales will likely reflect this impact, but buyers who are able to act now can capitalize on a lower level of competition. Sellers who are ready to list their homes should be encouraged that there are still a large number of buyers who will eagerly purchase well-priced and well-marketed homes. While there are consequences for both buyers and sellers, the existing home sales metric is simply a gauge of market activity during this period and favors neither buyers nor sellers. Median sales price. The median is the price where half of the homes sold in any given area that month were cheaper, and half were more expensive. The median sales price fell 0.8% to $406,700. The double hit of high prices and mortgage rates is hard for many buyers and would-be sellers that would need to purchase again. Even with diminished demand, there is still not enough inventory to meet demand, which means that prices will likely continue to rise. Buyers who are able to take advantage of lower levels of competition by buying today can lock in today's home prices and refinance their rate later. 2 factors are driving current sales activity: inventory availability and mortgage rates, said NAR chief economist Lawrence Yun. Unfortunately, both have been unfavorable to buyers. Sellers still have an opportunity to capitalize on historically high prices and continued competition. Sales prices are directly related to the continued levels of low inventory, so this metric favors sellers. Current mortgage rates. Interest rates vary by area, lender, and type of financing. For reference, we look at the national rate for a 30-year fixed-rate mortgage. In July, interest rates are the highest they have been since 2001. Interest rates escalated again, breaching 7% and landing at 7.23% by the end of the month. Rising interest rates and home prices create an affordability challenge for anyone who has not yet entered the housing market. Many will need longer to save, reevaluate their search criteria and locations, or find alternative financing. Interest rates are a big piece of the affordability equation for buyers. Each 1% increase in rates is roughly equivalent to paying a 10% higher price. Thanks to strong prices and multiple offers, rising mortgage rates won't necessarily impact the sale of their home, or sellers may struggle as facing the same issues as buyers if they have to purchase a new home. Days on market. The days on market is the average number of days that sold listings were on the market. Those days are calculated from the day a property is listed until it goes under contract. If there were any days the property was off the market, then those days are subtracted. Days on market crept up from a rapid 18 days to a slightly more moderate 20 days. The average number of offers per listing was 3.0 in July, down from 3.5 in June, 3.3 in May and 3.1 in April. This may be due to slightly fewer buyers in the market. This month, the number of offers above asking price jumped up again to 35%. It was 33% in June and 31% in May. This is a great sign for sellers who may have felt that they missed out on last year's market. Buyers can be encouraged that the competition is still down from the 51% level it was at in June of last year. Although the number of offers over asking was down, the total number of listings that sold for more than asking was up. Buyers would do well to move quickly to make their decision. Sellers, there are still a large number of buyers in the market who act fast, compete, and more than a third of buyers are willing to pay above list. Now that we've covered the latest national housing market metrics, what do they mean for buyers and sellers? Let's consider what buyers and sellers need to know. Buyers. Great news! Inventory is up, meaning that you now have a few more homes to choose from. Interest rates are also up. When interest rates jump, decisive buyers have a narrow window to capitalize on less competition while others may pause to consider. Prices are down from last month, however, the trend isn't likely to last. In fact, with low inventory and strong demand, it's likely they'll go higher. You have a unique opportunity to find a house and lot in today's prices. You can always refinance as rates settle back down. If you find the right house, wouldn't it be great to make the move while all these factors are in your favor? Sellers. Timing the market is nearly impossible. The best we can do is read and react to the data available. Prices are strong. Last month, the median home price just hit the second highest level on record. With low inventory levels, well-positioned listings with a great mix of price and condition sell quickly. Days on market is just 20 days, which means homes are selling fast. What's more, 35% of offers are for more than asking. Have your realtor run the numbers based on the market and see if that achieves your financial goals. It's best to act now if you're ready to sell. If you are interested in comparing the metrics in this national market update with those in central Kentucky counties, check out our local real estate market updates for Frankfort, Franklin County, Georgetown, Scott County, Lawrenceburg, Anderson County, Lexington, Fayette County, Nicholasville, Jessamine County, and Versailles, Woodford County. Have questions? Call our Frankfort or Lexington offices or reach out to one of our real estate agents. Please join us again next month. Thanks for watching.